Let's welcome on board our next guest then. And Sandip Sabharwal is joining in. Sandip, it's Friday. It's the start of December. There's lots of reasons to smile. We've got the festive cheer. Everyone's saying that the Christmas rally is only going to continue. And I wonder if the smile on your face is going to widen, or even if I'm going to see one with respect to Tata Tech IPO. Did you manage to get your hands on that smashing debutant?
No, because the oversubscription itself was so high that the allocations came to very few people. And I think obviously the way the IPOs are performing, that by itself creates a new set of investors who could potentially come into the secondary markets, because we need to remember a lot of people who invest in IPOs are actually not equity investors. They just invest in the IPO because they think it might be a good IPO. Then they get allocations, and then slowly that journey starts. So I think IPOs doing well is good for the overall market.
You're sounding unusually bullish to me. Normally, when IPO goes high, Sandip Sabharwal would have come out and said, there is a bubble, there is a trouble, there is excitement, there is euphoria. You've been very bullish of late. Am I missing on something?
No, I think see, when things change, we need to change our views. So we can't be bogged down by a single view at all the time. So I think last 2-3 months, things are very clear that after a potential correction, we will see a start of a new rally, because a lot of global macro factors are falling into place. And all of us know about it. Eventually, the larger markets move on macros, and then you go and look out for specific stocks you want to play. So in terms of macros, we know bond yield seems to have peaked out, US dollar index seems to have peaked out, interest rates seem to have peaked out, so and inflation seem to have peaked out. So when all of these things are there, then there is no reason for us to be bearish. Now, if the market move up too much too fast, then we turn cautious in the short term. But overall, 2024 should be good.
Do you know, the normal temptation, Sandeep, is to book profits, right? Market has run up, the rally is strong, Nifty is now reaching that congestion zone. Do you think one should not fall into the trap of booking profits, at least in some of the large cap stocks now? Do you think what has just started in terms of a trend actually could be a big move by the time Nifty or large cap stocks peak out?
Yeah, I think so. See, even my portfolio is more weighted towards mid caps, but I do believe that 2024, just because of mean reversion, mid caps have rallied almost 40% this year. Large caps have rallied 10%. Large cap valuations are more near historical range, some plus minus 2, 3, 5% here and there. So next year, as the foreign fund inflow also returns into emerging markets, including India, the probability that large caps will outperform is much greater. So I think there's no reason for either for people who were holding large cap, they did not perform, they saw mid caps doing well every day, small caps rushing up, to dump their large caps and move into stocks which potentially the valuations are so high you won't make money. So I think next year large caps will do well, and mid and small cap should also continue to do well, but we won't see the kind of outperformance we saw this year.
The other stock which is worth revisiting again is Bharti. We've written it off. I mean, there was a time during pandemic, we all were working from home. So we said, okay, buy Bharti because Bharti will do exceptionally well. Data consumption was growing, so Bharti will do well. It's fallen off the radar. Even though Jio has not done anything very damaging, Bharti this year has appreciated by 25%. So that's one outlier for me. The second outlier, Sandip Sabharwal, in my book is what's happened to OMC stocks in last 1 month. HPCL, BPCL, 30-40% spikes.
Yeah, I think that's the only risk to the markets I see, because typically at potential at one point of time, people start playing stocks where there's no real story per se, because the fuel prices are still under control. They are not likely to be increased anytime till the general elections. And it is a business in which, how does an investor play this business? Because you don't know what profits will get reported, what the government will do, etc. So I think stocks which did not perform rallying now is the only sort of red flag in the overall basket of things.
Sandeep, would like to get in your take on real estate as well, because basis the kind of trends and interactions that we've been having with corporates within this space, it's looking pretty strong by way of residential, commercial sales, demand picking up, etc., and pricing. What's your sense as to where there's opportunity in real estate?
Yeah, I think all the things you said are perfectly true. There's momentum. It's very surprising that high value real estate is getting lapped up so aggressively at a time where actually the consumer demand is slow. If you see low ticket items or consumer goods, there the demand is slow, but somehow on the some premium segments, and especially real estate, the demand trends seem to be very strong. Now, that's the how the real estate sector is doing. In terms of stock picking, it's very tough now because the stocks have run up so much that it's difficult to find value. So I would think that the trend is still on in the real estate sector, but we need to wait for better levels. I am not buying at these levels.
When we say financials, we think banks. When we say banks, buy Kotak, buy HDFC Bank because they've underperformed. You know, that's been the narrative from last 6 months. Banks means HDFC Bank and Kotak Bank. They have underperformed, buy them. Momentum means PSU banks, buy them because they are coming out of a 10-year bear market, so to speak. But there is a lot outside financials, outside up, away from banks. Insurance has made a comeback. We've seen a comeback which has happened in the AMC stocks. We've seen a comeback which has perhaps happened in, let's say, CDSL. What else would you like to buy, given that the theme right now in India is financial inclusion?
I think all the categories you obviously named out. So there are banks, there are NBFCs, then these are these stock market related financial stocks, so to say, like BSE, CDSL, CAMS, etc. Then there is a segment of, like you said, AMC's brokerage stocks. So typically brokerage stocks I don't buy, although they've done exceptionally well, because I believe that the competitive intensity there is so high and very difficult for one to distinguish one from the other. But I think a lot of these stocks like CDSL, BSE, CAMS, etc., these could continue to remain compounders, although not at the rate at which they have compounded, but at a slower rate because the growth trends will remain. And financials, the large cap banks which underperformed this year because they are FII favorites and we saw continuous selling, there we could again see a bounce back next year.
I want to go back to Tata Tech and Ida to just talk about valuation. So Sandeep, here's the data. Tata Tech is trading at a P multiple which is higher than KPIT and Tata Elxsi on a FY24 basis. IDA is trading at a price to book which is higher than that of PFC and REC. But again, these are businesses which are going to be growing at a much higher pace because of the base. So if you have to say like this is a good time to, this is a good price to buy Tata Tech and this is a good level to buy IDA, what would be those levels?
See, because the listing happens at such a premium, then giving a rate which is much below becomes so difficult. But I believe that for something like Tata Tech, buying in the secondary market above 800, 900 makes no sense given the growth trends and valuations, because only at those levels it becomes attractive. And I'm not very sure because there is no specific reason why it should be trading at such a high premium.
Right. That aside, Sandeep, just wanted to figure out whether in the last 2 odd months you've been a buyer in any of the IPOs or subscriber in this case.
Yeah, Aisha, there might be IPOs I like, but the only reason I don't apply is that the allocations are so low and sometimes there are no allocations that it makes no sense for us to keep on doing that. And then you get small allocation, you think it's a good stock, you're undecided you want to buy or not. So that's the reason, unless I see getting some allocation in good stock at good valuation, I don't actually apply. But that doesn't mean that one should not apply, but then I don't.
IPOs in 2023, Tata Tech, Idea Forge. By the way, where is Idea Forge actually? I think yesterday it fell, yeah. Guys, please remember, Ultimately, markets are a true leveler. What may happen in the short term, it may be a spike here, it may be a spike there. It works the other way around in a bear market where value becomes extremely obvious and the fear just grips you. Look at Idea Forge. What was the 52-week high versus where it is right now? It like had this bumper number 100 times oversubscription, some went to some crazy P multiples. Blink of an eye and a 1300 rupee stock has come down to 780. Now you may look at the listing of Idea Forge and say, okay, bumper, drone, new area, but it just went to a crazy P multiple, and that's where markets will equalize. So please don't do chance pe dance in the IPO market. Please don't do that. It is not a lottery. There is a difference in skill and luck. Right now what is happening in the IPO market is luck, not skill. And in financial markets, you need luck, but you also need skill. So please don't forget that. Idea Forge is a clear example. I'm using that for just illustrative purposes to demonstrate that when IPO comes out, there's a crazy interest in it. It just goes out of the whack. Everybody thinks that this is the next new thing. And then when the realization kicks in, when market equalize, look at what's happened. We've seen that to fintech companies, right? Zomato went to 150, came down to 155. Paytm, some crazy number in terms of IPO level. Look at where it finally bottomed out. So Sandeep, I guess this simple story is telling me that never ignore risk. Chance pe dance mat karo.
Actually, dance per chance, but then it's okay.
But
No,
that's the way it is, right?
yeah. So I think Idea Forge, in fact, it came out. I've been actually tracking the performance also. The performance has been actually fundamentally, if you see, even at this price, it is so crazily valued. Like the sales have been doing badly, performance. So people see a segment, they think that it will just this segment will just go crazy into a crazy growth. It doesn't happen that way always. So I think you need to recognize risks also.